Good morning, everybody. Welcome to Stockradar Stocks on the Move for another week. Today's date is the 1st of May 2024. And my name is Richard Lee and I manage the stockradar.com.au website for you. Well, today we're focusing on under the hood as the correction unfolds. Normally, I know we've had a big down day last night, but you know this market's gone up a long way over the last few months. So we're in the correction is really unfolding as you would expect. But we're going to look under the hood a little bit today to see if there's some stocks that are performing pretty well. We've probably knocked off about 18% of our stock picks in the last couple of weeks, so we've certainly taken some profits and held back, but we're still holding some good stocks. So we'll have a look at a couple of those today and a couple of opportunities for you. Positive this week is the correction process is continuing, which is probably a good thing because the market has been up so much. Just to have a little bit of froth blown off and a little bit of sensibility come back to the market is a good thing. Copper and gold are super exciting. I know gold's come off a bit last night, maybe 40, 50, 60 bucks, but it's been up $400 this year so far, so that's not a bad thing on gold. It looks pretty exciting to me. Finally, I'm getting excited about it, and I'll show you a bit about why later on. Another one is BHP's move on Anglo, which is an interesting thing to try and shore up their copper assets. After shrinking to greatness, they're now looking to expand to greatness, and this is a big chunk they're going to take here, but it looks interesting if they can pull it off, but that's by no means certain. Okay, I just want to talk about the leaders. They're struggling a little bit, as we know. I'll show a few stocks later on, the leaders there, but they're performing. We've got about 8 out of our top 20 stocks as stock picks, which is not that many, which means 12 are down to neutral, and they're down quite badly, whether it be Woodside, Sonic Health, Telstra. They're all been pretty weak. So the top of the market end, the top end of the market's not looking that flash at the moment. Banks are sort of stabilising, they're sort of holding things a little bit. But as I say, under the hood, there's some good stocks in there in a small to mid-cap region, which we're giving a good work over at the moment. So that's what we're looking for. So let's just go to the top 10 to start with. And see what that says to us. Okay, top 10, a mixed bunch again. Telex at the top, which is really going well. Nice little momentum trade. Computer shares made a new high. We've got Newmont's finally come in. Orica, RMS is a Goldie. Sandfire, Gold, Copper. There's not a lot of good copper stocks on our market, so we really like to focus on BHP and perhaps Sandfire as the main ones there. Then we've got Capricorn and Emerald and Goodman Group still up there, still doing well, and GQG, which has been there for a while. So that's an interesting little group of top 10 there. We've got quite a few top 9, top 10 ratings on Stockradar, so there are still some stocks out there for you to watch despite what's happening in the market. Stock pick count so far, we are looking at down. We've lost another 2 this week. In fact, we had, I think, 2 in and 4 out this week. So we've lost 2 more this week. As I said before, we've lost about 18% in the last 2 weeks, which means we've just taken some profits and some cream off the top of the market at the moment. So we've got 49 stock picks of 156 stocks and 18 ETFs of 24 there. Okay, now let's go to the markets and have a look and see what they're doing. Now the Dow was off a bit last night, but again, we're really not looking in the scheme of things. A bit of perspective, step back, have a look at it. It's really not a huge move. It certainly was down, but the correction is unfolding as we probably would expect. This is a change in behaviour. Okay, we can clearly see it from this. So it's a change in behaviour. So things are happening, markets are correcting, people are taking profits, buyers are withdrawing, all the sort of stuff that makes the market come back. So this could come back a bit further yet for the Dow. If we look at the S&P and the Nasdaq, possibly not quite as bad, but they're sort of they are coming off, as you can see. Support's back down here around 47.60, and we've got the average here around 48.80. So that's really an area we're probably looking at for some sort of corrective pattern to take us to. We can see some selling is appearing there. It's more evident on the Dow, but the S&P and the Nasdaq are also, as I say, there is selling appearing there, and we can see here the Nasdaq, it was quite heavy. A bit of buying the last week, but we're back down again. Coming off this high, a little bit of a nervous one for me then when we come off a high there, because this could spike down a little bit. So I'm a bit wary of some of these tech stocks at the moment. Not that we're heavily into it, but there are some tech stocks we do hold at the moment. So we're just going to make sure we are vigilant with our stops on those ones there. Okay, our market, S&P ASX 200. Had a nice rally this week so far, but we're going to be back down again today. And this will probably come back down. So again, we're probably seeing a bit more of a corrective pattern here. We've got the support bubble down here, which goes from around 7,400 up to about 7,500. So that's probably there I'm looking at. Any further down from that, we might see a further correction. So the ASX 200, again, as I said before, the leaders are coming off a little bit, but I'm not too worried about this index. It's more the excitement of what's underneath there, and there are some interesting stocks underneath there that are doing very, very well, and I'll show you some of those later on. And some of these stocks have been doing well for quite a long time. Okay, so let's have a look at gold now. Now the commodities are a bit slow to update on my system, so they haven't updated yet. So we're back down here around about 2,300 here. We've lost about $60 last night, I think, but not in the scheme of things, not too bad. And again, there's huge volume here, which really excited me quite a lot, and the price went up a lot. That means it's a really good sign. That's validating that. And that hasn't happened for quite some time. You know, I've been fairly negative or fairly neutral around this area here, but now we've seen some good buying entering the gold market, and that certainly looks like a very, very interesting stock commodity to me, as does copper at the moment, which is also ramping up its prices and moving nicely towards R2, well on track to hit that R2 target. And if it goes through there, that's even more interesting. But what I love again is the volume momentum behind this move, which is great. So quite an exciting thing, and there are some stocks there. Again, you know how I feel about gold. It can come back quickly, but you know there are some stocks there. So make sure your exposures and your risks certainly have some goals, but just make sure it's in its right place and you're not overly stocked up on goals, because we know what can happen there. So that's gold and copper, which is looking great. Crude oil, again, we're a little bit sort of, unsure what's going on here, because the crude market really hasn't responded whatsoever to any of this sort of stuff. In fact, we're seeing quite a heavy amount of selling go on at the moment. So, you know, it's really not doing anything. So the oil stocks won't do much at all. And I know Woodside, I think, made a new low again yesterday. So not such a good look on the crude market. Okay, now let's get to some stocks. First off, what I want to do is I want to go to one stock, which is a health stock. It's called Fisher & Paykel, and we looked at this one a while ago. But it's now, you can see it's quite an interesting technical chart, this one. We've had a big distribution pattern here, a big downtrend, a big accumulation type pattern here. In fact, this huge pattern here is looking like a major reversal. Okay, a major trend reversal, which is a big pattern built up over about a year and a half. And we're now at a fairly interesting point here where this has provided some very good support and now providing resistance. And we're just sort of poking our nose through it at the moment, which is making me look quite excited about Fisher & Paykel after having a bad time for a while. It's now looking like the trend is ready to reassert itself. Above here is a new high, and this is what I'm looking for, and that certainly targets R2. So this looks like this big reversal here. We've got a high low there. Volume is, well, not that exciting yet. I hope it's going to pick up a little bit. It has picked up a bit the last few weeks on this rally here. Momentum's okay, and it's above the average. So the trend intensity rating will kick up to 9. Now, it shouldn't be 9 at the moment because we haven't got the signal yet, so I'm not too sure that's like that, but it probably will go to the strongly trending zone because of your volume, your momentum, and your moving average next week, if it does break through. Okay, so that's certainly one to watch, Fisher & Paykel. Again, the health stocks are a funny area, and they're not doing that well. Cochlear's doing okay, but a lot of the other ones, like Sonic Health, are really not performing at all at the moment. Anyway, Fisher & Paykel certainly one to look at the moment. Another one here is Rio. Again, you know, we haven't really looked at this one for a while, but it's now up here, getting up towards its highs, up around 135. It's currently about 130 at the moment. We've seen some fairly good moves here on the volume just recently, and momentum is in fact positive. It's above 0 still, so we've got these nice little high lows here, which is very encouraging for me. I like this sort of pattern, high highs, high lows. We haven't got a signal yet because we're still in the range, but if this breaks through, this then signals the potential for another extension of this trend that started down here. It's within the range still, but we've still got the high-low pattern, which is developing nicely. So I won't get into it until this R1 goes. That's just the way I do it. But then hopefully we're looking for a nice little leg up and a good trade on there. So all the price construction is positive. We just need a break above 135.66 to go bang and see this one move higher. So keep an eye on Rio. It hasn't done much for a while, for probably about 1, 2, 3 years. It's traded in this range, but we may finally be looking towards getting a breakout there. And another one that I'm looking at also, again in the gold sector, big picture gold. I know we've seen a big rally, but this could be a big turning stage for gold. It could go a lot higher, I don't really know. But when I look at stocks like Northern Star, if I just go back a little bit here, you can see this is an old high here. So we're reaching a fairly important point for Northern Star. It's a strong trending inclination above 1656, so this will be a new high. We've got some high low here, a high here. So this will really, again, this is me building my picture up. I've now got good momentum. The volume is not too bad. If we just close this up a little bit from that big spike back there, we can see we're getting a quite encouraging on this little rally here up towards the highs here. So this R1 here for me for Northern Star is quite an important point. So we're talking about the commodity cycle changing, and it looks like it is, but we look at things like Northern Star, the gold price, look at Rio. There's some quite exciting moves potentially coming along there in that commodity sector. So certainly worth watching, and certainly some exposure is probably a good thing. And you can see in our top 10, I've got a few, and throughout my stock picks, I do have a few there. Not overly there. I'm more comfortable with my gently trending industrials, but the gold sector is offering some opportunities at the moment. So that's quite interesting. I'm also going to have a quick look at BHP for you. After that report, the market didn't particularly like it, didn't kill it, but it certainly knocked it back a bit. But we can see this whole rally up here. We've sort of broken this series of lows here. It struggled to break through the highs here. We didn't get a signal. Now it's just testing the downside to see where these buyers really lie. Are they going to hold this market up or not? We've got the Anglo thing now trying to not interfere, but it does muddy the waters a little bit on this one, because we've got the potential of a great big copper asset being born, but at what price is this going to be the balancing act if it can do it? And I think BHP is fairly conservative. Mike Henry's probably a pretty smart guy. I don't think he's going to overpay for it. BHP is in a great position. Anglo is not in a good position, so it sort of holds the upper hand there. So we'll just have to wait and see. But at the moment, trend intensity rating is -9. So disregarding all that purely on a price basis, this is a negative. We've got a lower high here, and it may well make a lower low there, which means it may come back further. So we'll wait and see. We're below the average now. Momentum's weak. Volume's no good. That's why we've got the trend intensity rating of -9 there. So we're neutral on BHP, and that's where we're going to stay at the moment, and just let things play out there. Okay, now just a couple of sickies. I mentioned to you about the leaders before. When we look at things like stocks like Telstra, which had a good support level here at around about 380. It's fallen through there. It's now 367. The volume's reasonable. Momentum's weak. It's below the average. Trend intensity is -10. So it's not looking that good, as are a lot of the big leaders. So Telstra is unwell, and it's a bad sign when it breaks this support here, okay, on some heavy volume. We can look at Woodside, which is a similar one here, starting to break down support. It tried up here at around $38, $40, couldn't do it. It's come back down here, and we looked at the Brent crude price before, which is not that fantastic, and it's not doing anything. People are getting sick and tired of it, and there are better value offerings elsewhere in the market than in the oil market. So thinking of it, don't. Woodside, the price pressure is down. Cool heads make cool decisions. So just really wait for the opportunity. When the price is falling, you don't buy it. You wait till you get evidence of support. Then you get a turn in price. Then you can start looking at it. But for the moment, Woodside is a no-no. Okay, now I talked about before, under the hood, there are plenty of stocks going up. So apart from the negative side of what the ASX 200 is doing, what the Dow did last night, what gold did last night, what Woodside, Sonic Health are doing, there are stocks going up, as there always are. And that's what we like to focus on, because that's where we make our money. So the stocks that we are holding are things like Magellan. And I know I've gone over this one, but this is just a absolute picture of what you do with trending stocks. You just lift your stop and you let it happen, you let it roll. I did a thing on the market a while ago about rolling with the market, letting it go. Why would you sell a stock when it's on a roll like this? Okay, certainly when the market starts to hesitate a bit, as it has, we will tighten our stop. But for the moment, Magellan has been a great buy for us and is doing very well, as is Goodman Group, a property stock. Now, it's the only property stock. We talk about stock specific all the time, and generally Goodman is really the only one doing anything. Now, I know it's in the big distribution, it's moving to the big distribution area, and perhaps some of them aren't, but there you go. You just got to sort of roll with those punches. And for the moment, Goodman Group, we've had a couple of trades on Goodman, but this last trade we bought around $23. The stop is now at around $30. Trend intensity is +8. It's been looking fantastic. It's come down with the market. It rallied again. It may go off. I don't know. If it does stop out, we're going to lock in our profit and stand aside. And that's what we've done with quite a few stocks over the last 2 weeks. So that's Goodman Group. We saw Magellan. Another one here which we love is Reese, which has had a monstrous rally. It's right back to its old highs here. It did have a correction down here. It ain't over yet. It hasn't made a new high, but for the moment we're holding this. We might lift our stop a little bit by the end of this week to lock in this profit here. But certainly it's another stock that's going up, which has been a great stock. Okay, so now we can go now to GQG Partners, which is another stock that's been going up very nicely, very quickly. Came back this week a little bit, but it's been quite a jumpy stock, this one. But generally the trend is up, and that's what I'm interested in. So like this week, we've got the Dow down last night, but that's okay. I really always wait till the end of the week to see where the market finishes at the end of the week. That's my important marker. So during the week, stocks and US indices all can go up and down, do what they like, but the end of the week is what I focus on. So with GQG Partners, although it came down a bit this week, we'll still watch this. Our stop is in place to protect our profit, which we will do. But for the moment, that's it. And without having to sort of do too much here, the volume here you can just see has been pretty good on the upside here generally, apart from this couple of sell-offs here, and did drop the price here, but it went straight back up again. So we just have to, we work with our stop. That's what really tells us what we do with this stock at the moment. That's the only important point for me. I can look at all this analysis and look, this looks great, but really in the end, it's money management that gets me home, and that's what I'm going to do with this. So I know where my stop loss is. Okay, two other stocks I've got for you. One is again. Stocks going up, talking about stocks going up, Sandfire, which has done a great job since it broke through that 750 area there. It's up about, it's 950. It must be up nearly 30% since we bought this one, which is a great stock, which is a great purchase. We've got some reasonable volume here. Momentum's good. It's well away from the average. So there will be a correction at some stage, whether it comes from here, 10, 11 or $12, I don't know, and we never know. So that's why we just follow it up with our stop, which is what we're doing with it. And we're all already in a good profit position, and we want to make sure we stay in a profit position, which is the most important part of the game when you trade, is when you have profits, you know when you're going to lock them in and don't let them disappear. Nothing more frustrating, nothing more psychologically debilitating than watching all those profits disappear. Okay, even if you decide to say, okay, I'm going to just sell this stock and then I can just buy it if it makes a new high, that's fine, but that's not the way I do it. I wait for the market to come back a certain amount, and then I'll sell. I'll never get the top. That's not what I do, because you never know where the top is. So I just raise my stop, and that's the way I find it's the most effective. Doing it, trying to sell into a rally and rebuy, it's all a little bit trying to time it, and it's a bit hard sometimes. So again, I just let my stop do the work for me, and it tells me how to behave and what to do. But this has been a great rally by Sandfire, which we love. Momentum, volume been steady. Why is it so steady? Nothing significant there, probably because it's hard to get a hold of stock. That's usually the answer to the question when your volume's not too high and you've got a price going up like this. It usually means there's a shortage of stock and people have to keep bidding up to get a hold of any. Trend intensity rating is 10 for Sandfire. And finally, Telix Pharmaceuticals, which we know has been quite a good, interesting little stock since we started covering this one. But it made a new high back in March this year, and it's gone from $11, it's nearly $15, and it's doing quite nicely indeed. So its trend intensity rating is 10. It's a little momentum trade, and again, so we just follow this on up with our stop loss. So don't be despondent. Under the hood, the little guy on the front page there is looking under the hood and he's finding all these little gems in there, and there are certainly stocks there. But it's a little bit about I might as well go to my PowerPoint. Just one slide here I've got, which I'm talking a little bit about today. So it's really about following your own path, having your own trade plan. We all have different time frames, different trade plans. We buy and sell for different reasons. So it's important that you follow your trade plan and do what you think's right. So in this market that has been coming down, we do get despairing when the ASX 200 comes down, but that doesn't mean it's all over. As you can see, there are still plenty of stocks going up, and they don't weight in the index, many of them. Okay, it's the top 20 that drive the index, not the bottom, not the ones below there. So they can still go up, and it doesn't really affect the market. So don't get too depressed when the ASX 200, i.e. the 20 leaders, is down. Okay, doesn't matter too much. There are always stocks going up. Okay, so it's important to be brave and be confident in what you do and be an individual and follow your own path, because that's the way to success, and that's how you'll find consistency, and that's also how you'll find some contentment in what you're doing and that you're doing the right thing. So just by taking some profits the last couple of weeks has been a good thing for us, so I feel pretty good about that. We've locked in some really good profits there. Had a couple of small losses maybe, but that's okay. The profits outweigh the losses, and that's what the name of the game is. That's why we make money on our homepage chart there and our returns in our portfolios. So that's really about it. So as I said before, stock-specific selection is the key to targeting unique and special performances and catching those all-important money flows. Because all we're doing is trying to follow money and where it's going and where it's not going, and that's what price is telling us when we look at the price action. Okay, there's always movement around market caps and sectors. So movement can go into the top 20. It can move into mid caps to small caps. It can move from health to other stocks. It can also be a sector with only one stock in it, like Cochlear in the health sector. So it's a matter of following the money flows you can see on your charts there. You need to be observant and prepared to move with the movement, and don't be too slow to react. If you're too slow to react, often when we're in a good position, we're making some good money, the market comes back, we're too slow to identify, observe, and actually act on that correction, because we still hopefully it's going to go up again and we're going to make more money. But be realistic about what you're doing and how you're behaving when you do your trading, okay? Alrighty, so that's about it, all I've got for you today. Watch your trends, hedge your stops, stay safe, and I'll see you all next week. I know I'm coming to you a day earlier this week. I can't do it tomorrow, but hopefully I'll be back next Thursday again, updating you on what's happening in the market, and we are in exciting times. So I'm looking forward to next week again. Okay, thanks very much, and I'll see you later. Bye now.